Trump talks about investing billions, but the exact figure hasn't been committed by oil companies yet, and the scale needed to put Venezuela back in power mode is enormous. Trump said he wants US oil companies to invest billions of dollars to repair Venezuela's severely damaged oil infrastructure. But according to Reuters, the majors, Exxon, ConocoPhillips, Chevron, were not previously consulted on specific investment plans, which indicates that today we are more in a political strategic phase than in an already approved capex phase. So what's a realistic figure? Experts cited by financial media in the region provide a strong benchmark in the order of $100 billion to repair damages and return to pre-Chavez era production levels. This isn't just a project, it's a reconstruction of the entire system. Upstream, refining gas, the domestic market, personnel, spare parts. And why would the United States want to push for this? Two important reasons. Venezuelan crude is mostly heavy and extra heavy, and the United States has refineries on the Gulf Coast that are especially suited to process that slate. Furthermore, US officials have mentioned a global shortage of heavy crude. Pure geoeconomics. Adding potential future supply can lower pressure on prices and reorganize flows that are currently heavily oriented towards Asia. Now, which refineries need help and where exactly? The most common bottleneck in Venezuela isn't a lack of oil, it's a failure of industrial reliability. Blackouts, unscheduled shutdowns, fires, difficulty importing spare parts due to sanctions, and critical units being out of service. The Paraguana Refining Center, or CRP, which includes Amway at 645 kbpd and Cardón, with a combined reported capacity of 955 kbpd. In 2025, it was seen operating at around 25%. Distillation was running, but with limited conversion. In Amway, for example, Reuters reported that its FCC was still out of service after a blackout, which directly impacts gasoline and blending components. Cardón, with 310 kbpd, has a recent history that includes a fire that forced distillation units to shut down and also affected an electrical substation. In other words, the problem isn't just the process but also utilities and power. El Palito, at 146 kbpd, had its FCC restarted by PDVSA after an 11-month shutdown, precisely to compensate for limitations at Amway. This shows you the exact point. Venezuela is patching its fuel supply, moving loads between refineries depending on which critical unit is operational. And be aware of an operational detail that explains why the investment isn't just about plugging in money and that's it. If your exports get stuck and your tanks fill up, PDVSA resorts to extreme measures to avoid shutting down units due to a lack of storage capacity, especially with residuals from extra heavy crudes. TrendOil Vision's opinion is that if the plan really exists, the first big check doesn't go to new wells. It goes to reliability, electricity, spare parts, mechanical integrity, and reactivating key units. Distillation, FCC, reformers, utilities, and only then sustained expansion. This is TrendOil Vision. Understand oil like a professional. If you like these types of videos, give it a like, subscribe, comment, ask questions. Thanks.